If we were to break above it, I would watch it carefully because sometimes what the charts do and the institutions do is they'll push things above a little bit just to try to stop out the weak hands on the short side and get more bulls on board before reversing it. And so I'd watch very closely to see if it confirms above that level. And if it does, then you got to think that we're probably headed towards that 150 zone, which would be your next resistance point. But again, right now, as long as that level is there, meaning the 115 level, I respect it until proven otherwise.
Bitcoin and the S&P 500 are approaching pivotal levels, and the market is showing signs of heightened tension. Over the past year, Bitcoin has delivered a dramatic performance, surging from a mid-2024 dip near $57,000 to an all-time high above $110,000, before hitting heavy resistance close to $115,000. The momentum has been undeniable, but so has the volatility. According to popular market strategist Gareth Soloway, this climb has often mirrored movements in the broader stock market, though Bitcoin's trajectory has been far more intense. Its sharp rally was fueled by a combination of retail enthusiasm and renewed institutional interest, each group quick to shift positions based on changing economic winds. Optimism in equities often spills into the crypto space, but with far more pronounced swings. The $115,000 level has emerged as a technical stronghold, one that may see attempts to breach it through strategic moves by large players. These maneuvers could briefly push prices higher, triggering momentum-driven entries before reversing sharply and flushing out latecomers. It's a classic pattern seen in markets driven as much by psychology as by fundamentals. Even in powerful bull cycles, Bitcoin is known for sudden, deep corrections. Pullbacks of 30 to 50% have been common throughout its history. A retreat to the $60,000 range would not signal failure, but rather a return to form. The evolving interplay between Bitcoin and the S&P 500 offers a compelling lens into market sentiment and investor behavior heading into the second half of the year. Stay tuned as we bring you more clips from Gareth Soloway's interview with David Lin. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
The S&P is up to 6,000 points now. It's nearing new all-time highs. Gareth, why this bullish sentiment?
Yeah, so I think the key here is that we've had these investors and retail, and even to some extent now, these second-grade hedge funds that have really been saying, oh my goodness, I've got to pile in this market. And so I think the retail investor has really done well here because they've been the ones that have been targeted by the Fed and the government when the government and the Fed has come out and stimulated, right? So they're used to, and they've been programmed since the lows in March 2020 and every subsequent major sell-off that there's a V-bottom recovery. So if you've been programmed to assume that that will happen, you're going to assume that in this situation, it's going to happen again. And it's almost like a self-fulfilling prophecy, right? We're seeing the S&P, this beautiful down move, but then vertical right back up. And hedge funds have now been late to the party. They were sitting in cash. Now they're being forced to chase this into quarter end. We all know the quarter ends the end of this month, and they have to show that their investors that they did well during this recovery period. So I think this combination is driving markets up, but I don't buy that it's going to last here, and I'm going to show you why. So again, remember, I am a chartist, meaning that the charts are what speak to me. I translate it into probabilities. Now, one of my big concerns here is that if we go to that logarithmic chart on the S&P 500, we're still bubbling up against a trend line that goes back to 1929 before the major Great Depression market collapse. And then that same trend line connected to the high of the dot-com era. We just tagged it here. We pulled back. We obviously had a 20%, nearly 20% drop. Now we're pushing back up. So could the markets hit a new all-time high? Absolutely, they could. But this trend line, I have to respect it and understand that every time we've hit it, we've had a major pullback, whether it was the Great Depression, the dot-com collapse, or even this recent drop of 20%. And so again, if the S&P goes up to, let's say, 62 and a quarter to 6,250, I would think that at that point, the markets will see a drawdown. And let's be clear here, folks. The economy is slowing. Yes, the headline labor numbers, okay, sure. Whether you believe it or not, or whether you think that they're going to be revised down or not, we are seeing a slowdown in the global economy and the domestic economy. And at some point, these valuations of these stocks, which are historically very, very expensive, will have to come back to earth. And the charts here are telling us, sure, a little bit more upside, but then watch out for the next flush to the downside.
Gareth, at what point do you think that the S&P is going to start reversing? Obviously, we don't know the top, we don't know the bottom, but at what level would you start looking at it and say, this is getting way too frothy?
Yeah, so I think we're getting close to that. We're seeing today the semiconductors, and I want to show you actually this chart in a second, but the semiconductors are nearing a major resistance level. I also think there's a tendency to always get the maximum amount of bulls on board before the rug essentially gets pulled underneath the retail investor. And so when you look at the S&P, right, and we go back to our regular chart here and we look at where we are now only approximately, let's see here, we are about 2.3% away from our all-time highs. And so what would make investors the most bullish? Where would the shorts start to panic and stop out? Well, if we broke the all-time high, where would the people that are sitting on the sidelines that aren't really believing this rally, where would they finally throw in the towel and jump on the long side of this market? If we broke the all-time high. So I think it's very plausible that we could come up to double top here, pierce double top, which would then have us hitting that longer term trend line at around 62 and a quarter on the S&P 500 logarithmic chart, right? Going back right to here to this chart, right up here, we take out that all-time high, gets everyone bullish, thinking this market is unstoppable. We hit that line, and then it starts to come in. And I just want to show this chart too, one of my favorites on the NASDAQ. Look at this right here. So this is the perfect parallel channel, and channels, again, they tend to keep price between them. But you can use the trend lines of a channel to trade very accurately, i.e. the low of COVID all the way to the high of the bull market, back to the low of the bear market, then gave us our exact 2024 market high. We then had this collapse. Now we're pushing back up. So if the NASDAQ gets to about 21,000 or 20,900, we'll slam into that level again. And my guess is then you'll see that next big fall. Here's your NASDAQ chart. Okay, so here we have the NASDAQ, right? And what we see here is this is that big parallel that I was just discussing. So let me show you this, and then we're going to look at the key Fibonacci retraces. So you have your COVID low to your bull market high. You have your bear market low that gave us our bull market high here in 2024, where we collapsed off of. We've now retraced. And if we get up to this level here, you would assume a rejection. Whether or not it gets up there is kind of up for debate. And if we go and zoom in on this, we can clearly see that if we take that previous all-time high and we do our Fibonacci retrace, we're right at the 886 Fibonacci retrace resistance. So you have resistance here. Then you have your all-time high right here. You're testing your double top. And then if we get through that, there's, again, upside to maybe that upper parallel. And I just want to show you this, too, because I think, we're talking about maybe a little bit more upside in the markets. But even if we go to that upper band of the parallel, that's only 6.7% higher. So again, the upside is very, very limited to me in this market versus the downside. I still think that at some point, the bottom is going to fall out of this market and we will see a major drop. And again, just flipping back to the SMH short term, I want to show you this. Take a look at this chart. So there's a trend line here. And can you see the SMH chart there, David?
Yeah.
Okay.
Got it.
So you have your all-time high on the semis right here, and you connect it to this high. And you have a gap fill right here. Notice these two lines are right in this zone. And look at what the SMH just kissed today, the lower band of that trend line. So huge resistance on the semis here. And sure enough, we're starting to pull back intraday on the SMH. It is coming in. And these are all signals to me that the market is running out of energy. The question is, when are the economic data points gonna weaken? And that's when you'll see the bigger rollover. You'll see small pullbacks here, as long as the economy stays strong. But it's when those economic data points weaken, which they will, that's when this market goes down 10, 20, 30%.
The S&P 500's ongoing rally is being driven largely by a mix of retail investors and hedge funds, influenced by years of swift recoveries following Federal Reserve and government interventions. However, this upward momentum is approaching a historically significant trend line that has marked major market peaks since 1929. While a new all-time high remains possible, the resistance zone between 6,200 and 6,250 could present a meaningful barrier. Despite the optimism, there are signs that the upside may be limited. Market valuations remain elevated, while underlying economic data is beginning to soften. This combination raises concerns about the sustainability of current price levels. A sharp economic downturn, if it emerges, could trigger a major correction. Historical patterns suggest that such pullbacks can range from 10% to 30%, particularly when valuations are stretched and technical resistance levels are tested. Sector-specific charts, such as those of the Nasdaq and semiconductor stocks, already reflect signs of pressure at key resistance points. As the S&P 500 nears these critical levels, investors may want to approach with increased caution, balancing enthusiasm for further gains with awareness of growing risks. Let's watch more clips from Gareth Soloway's interview.
They do look very much correlated to each other. So do you have the same analysis for Bitcoin as you did for the Nasdaq?
Yeah, I do. In fact, almost identical. And you're right. There are periods with Bitcoin where it diverges slightly. And for instance, when there was this fear in early April that the treasuries were not demanded by other countries, countries were fighting back saying, hey, we're not going to buy US debt. We saw that uptick in yields. The market obviously panicked, but Bitcoin started to see some interest there. Same thing with the dollar, where the dollar has historically been the safe haven asset. But for short periods, people were like, wait a minute, maybe the dollar's not the best safe haven. Maybe we should buy some Bitcoin. But aside from those rare instances, the market has led Bitcoin up and down. And we could see that very clearly. Like last week when Elon Musk and Trump were having their feud and the stock market sold off, we saw Bitcoin selling off. Then as the stock market has rallied back up, Bitcoin has rallied up as well. But having said that, you have to look at this chart right here. And I'm going to just zoom out on this one chart on Bitcoin. And I want to show you this trend line. And this is the trend line that has me thinking that Bitcoin, while it could go a little higher, is capped in the near term. Look at this trend line, guys. This is a parallel. And again, what we can see on this parallel is that you have your exact low here and here. And then if we flip over and look at the highs, the 2017 bull market high, the first high in 2021, the second high in 2021, and then here in 2024, early 2025, look at that high, right up into that parallel. So what that tells me is that if we see Bitcoin rallying up, it's going to have a lot of resistance right here, and it's going to likely get rejected again and come back in. And that matches generally the thesis that the Nasdaq, the S&P might have a little bit more upside here, maybe to new all-time highs. In this case, Bitcoin could hit a new all-time high, but then be very careful of that big pullback that we have clearly seen. Here, the bear market. Here, the bear market. Does that institute another bear market on Bitcoin? If the Nasdaq goes into one, most likely.
Interesting. Same question I have for Bitcoin as I did for the Nasdaq and the S&P 500. At any point, would you say it's time for a reversal? In other words, what are the levels for the floor and the ceiling?
Yeah, so ceiling is going to be, at least based on this chart, around 115. So you got a ceiling of around 115. And then you would be basically, for me at least as a technician, if we ever get back to this lower band of the parallel, that would be where I would be a buyer, which is down around 55 to 60,000. And obviously people will freak out when I say that. But remember, historically, Bitcoin pulling back, this would be about a 50% pullback. It's actually not that unusual to see that type of pullback. In addition, if we look at the chart here, look at this. That level coexists right with this area of support that Bitcoin was at just back in July of 2024, basically 1 year ago. And so it would be a good retrace hitting two major supports, and then you would have to think that Bitcoin would be a buy. And I just want to be clear, I'm a shorter term investor and trader. I'm a big fan of Bitcoin over the longer term. But again, being a chartist, I have to let the charts tell me where resistance is and where support is.
If you just look at the chart that you have on the screen here, mid 2024, Bitcoin had a bit of a pullback. Were you surprised that the pullback was not as big as it could have been? In other words, I think it went down from 71 to about 57. So that was less than a 50% retracement. Were you surprised by that move?
Not really, only because the stock market was still in a bull mode, right? We still were seeing that was, by the way, that pullback in Bitcoin coexisted with our July into early August stock market drop where it was, panic there for a very short period of time. But what we
Sure.
know is that the stock market then ripped higher to new all-time highs, and that's exactly what Bitcoin did. And in fact, what this is called here, the beauty of this chart pattern, just for a little education, this is what we would call a bull flag, right? So you have a big up move, there's your flagpole right here, and here's your bull flag. That was telling us another move was going to come up, and that's exactly what it did until we tagged the high end of the parallel.
Let's say Bitcoin breaches above your ceiling, so above 117,000, 115,000. What would you do then? Would that be an overbought signal or would that be a bull market signal?
So if it and first of all, you're exactly right. A good trader always understands that any level of resistance that they have could be broken, just like any support level that they have. So if we were to break above it, I would watch it carefully because sometimes what the charts do and the institutions do is they'll push things above a little bit just to try to stop out the weak hands on the short side and get more bulls on board before reversing it. And so I'd watch very closely to see if it confirms above that level. And if it does, then you got to think that we're probably headed towards that 150 zone. Which would be your next resistance point. But again, right now, as long as that level is there, meaning the 115 level, I respect it until proven otherwise. Yeah, so I think the first question everyone has to ask themselves is what's their time horizon? If your time horizon is you're a short-term investor, I would be in cash or short Bitcoin. I'm short Bitcoin myself right now with a stop just above that 115 level. If you're a longer-term investor, who cares, right? I mean, if your outlook is 20 years, just basically dollar cost average. If it comes down to 80, buy a little 70, 60, 50, etc. And I think that's the key. So time frame here does matter in terms of how you are as an investor. Shorter-term investors need to be aware of the down move. Longer term investors, this is just another blip on the screen in a general uptrend that we've been in since really the beginning of Bitcoin.
Generally speaking, then, your favorite and least favorite asset classes for the remainder of the year.
So for the remainder of the year, I'm looking at foreign stocks. Foreign stocks are where I think it's at. One of my favorites is Brazil. We've talked about this one in the past. This one, again, has been in a long, long downtrend. It's not been loved while we've seen U.S. equities soak up most of the investment money. This, again, has a beautiful kind of wedge pattern formation here. We can see right here, I'm expecting a breakout on this Brazil ETF. I also think China does come with risks, obviously, but compared to U.S. equities, these charts are so beaten down that I think there is light. And what I'm seeing is that Trump really does want to make a deal with China. He wants to ultimately try to avoid the pressure of all of these tariffs on the U.S. economy. Granted, I still think there'll be a certain level of tariff, but I think that as long as things get good here, the Chinese stocks are near a major breakout. This is Baidu's chart, for instance, long-term trend line. I'm watching for a breakout above $90 on this one, and Alibaba has already broken out. If we look at this chart here, you could see classic breakdown. Look at that. Hits, breaks out, and then here's your retrace to the scene of the crime. And I think this chart is going to go a lot higher. So I'd be looking more so now at the unloved external U.S. Companies or stocks, and then looking for money to rotate out of the U.S. into those unloved names and bring them back up.
According to Gareth Soloway, the Nasdaq and Bitcoin have demonstrated a significant link, frequently moving in unison. He clarified that although Bitcoin does occasionally deviate, such as during times of anxiety over U.S. treasuries or uncertainty about the dollar's ability to serve as a haven, these occurrences are uncommon. The price movement of Bitcoin typically closely resembles that of the stock market. For instance, Bitcoin fell along with the stock market when it recently sold off due to high-profile news, but both recovered when markets did. A long-term parallel trend line that has frequently served as resistance has been identified by Soloway as a crucial technical pattern on the Bitcoin chart. He noted that significant highs had touched this upper limit, including those in 2017, 2021 peaks, 2024 highs, and early 2025 highs. This implies that although Bitcoin may see some short-term growth, it will encounter significant resistance in the $113,000 to $115,000 range. Gareth Soloway predicts an initial rejection and a potential severe correction, which could see Bitcoin retracing 30 to 50%, maybe down to the $55,000 to $60,000 zone. However, he thinks a decisive move over this level would be important. He has noted that Bitcoin frequently experiences these kinds of corrections, and that, given its alignment with recent support levels and past cycle highs, the $74,000 to $75,000 range may be a good place to buy. The significance of the time horizon has been highlighted by Soloway while talking about investment methods. He advised short-term traders to exercise caution and think about taking profits or even shorting Bitcoin close to resistance by placing stops slightly above important levels. He also suggested dollar-cost averaging for long-term investors during declines because Bitcoin's long-term trend is still positive. For the rest of the year, Soloway has also stated that he would rather invest in international companies, specifically those in China and Brazil, than US stocks, pointing to their appealing chart patterns and the possibility that money may shift into these cheap markets. Do you think Bitcoin will break above $115,000? Or is a big correction coming soon? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.